Okay, this is Jim Smith at GANanalysis.net. Today I want to show you the Dow versus gold. What you have here is a relationship that has gone to extremes all the way to 45, almost to 45, which is, incidentally, that's a GAN number, back in August of 1999. That was one extreme. The other extreme was back here at 1 for 1, where gold and the Dow were trading pretty much equal back in January of 1980. So that's the other extreme. Now you can see most recently we got close to, in September of 2018, we got close to the 50% mark. Taking the low here, the swing low, the swing high, half the distance would be 22.81, and the top here came very close to this level. That is not a coincidence. That set up what I believe is going to be a major downtrend for this ratio. Now, if it's going to go down, what does that mean? It means that either the Dow has to go down or gold has to go up, or more likely, both. If you think about the idea of stagflation, it makes sense because you go through a period of the 1970s where inflation is run amok. Corporations can't really make a profit. They can't pass on all their costs to customers or they stop buying. So, deja vu all over again. Yogi Berra. Dow versus gold. Get ready. This thing is going to go down in 2023, 2024. It is on its way down. By the time it gets to parity, it's going to be very similar to what it was back here in 1980. If that represents the extreme where gold made a high, the same thing could happen again. So what I'm saying is we're going to go through a period where maybe MMT becomes fashionable. We've already seen socialism and MMT breaking new ground. If they manage to do a reflation trade in 2023 because they want to halt the recession, it's only going to make things worse because it's not, you like the Fed is now intent on raising rates to kill inflation, but if they stop raising rates too soon and they reverse course and decide, we're going to do a reflation trade because the stock market is getting crushed, the economy is in a recession, that's only going to make it worse because then you reignite inflation and guess what? Then you get the worst of both worlds. Rising costs, rising inflation, low productivity. It's going to be a nightmare. That's why Jay Powell doesn't want to do that. He wants to obviously keep raising rates, but the political pressure is going to be extreme. If you see the stock market plunging, there's going to come a point where he's going to be forced to stop raising rates and maybe even start cutting rates. That's where you get this move where the Dow suddenly sells off and gold rallies like crazy. That inflection point is coming. This is going to be crazy. Now, if you want to avoid that disaster, you should take evasive action now. Avoid the worst case scenario. What is the worst case scenario? What happens if the dollar sells off, bonds sell off, and the S&P sell off? All three. Could that happen? Yes, it could. So I think you have to take evasive action. You decide what you want to do, but I think of gold as a currency. It is, all paper currencies are going to be depreciated in value because they're all doing the same thing. Bank of England, ECB, Bank of Japan, the Fed, they're all printing money, or they have done in the past, most recent past. Now, the Fed is tightening now, but how long can they continue to raise rates, especially once the recession really starts to bite in 2023. Can they keep going? I don't think so. I think they will launch a reflation trade, cut rates, and try to ease the pain of the recession. But it's not going to work. They played that game one too many times. This time it is not going to work. You're going to get stagflation. So it's only going to make things worse. So this is going to be very interesting. The Fed is now caught between a rock and a hard place. It's hard to say how you solve this problem. Whatever they do is probably not going to work. So watch to see if you see this ratio, this spread start to decline quickly. You'll know what I'm talking about. You'll see it when it's happening. And you'll know that, hey, things are not going to work out the way the Fed would like. So, like I said, inflation will not be tamed by the Fed. There are things beyond the Fed's control that they cannot do anything about with monetary policy. It's just not going to work. So, let's see what happens. If you're interested in seeing more Gann charts, think about a 3-month trial subscription. Go to www.gannanalysis.net. Register to the website. You'll get some free reports. They're older, but if you want to see new reports, try the service for a month or 3 months. See how you like it. If you don't like it, you don't have to renew. If you don't renew, you automatically fall off the list, and no harm done. You just limit what you decide that, hey, I don't like this service, I don't want to continue. You're not locked in. You just basically try it for 3 months, and if you don't come back and renew, that's the end of your obligation. Try it out, see what you think. Hope this has been helpful. I do want you to get out of harm's way, and to me that means that you should be watching gold, silver, platinum, precious metals. Things are happening here that are going to shock you in 2023.